Scary headlines in the business press Monday night after stocks slid more than 2% in a single day. You might have seen something about Wall Street getting walloped or stocks unraveling as the Dow sinks 300-plus points. In fact, the Dow Jones, the S&P 500, and the Nasdaq all fell between 2 and 2.6%. This is the latest in a slide that started in mid-January. So far this year, the stock market is down around 8%. But there's plenty of talk saying that's nothing to worry about. The business networks have been full of folks lately saying similar things, that a correction or a dip of around 10% is coming, that it's a totally normal part of the stock market cycle, and that it paves the way for future growth.
If we get a 10% correction, I think the market will be higher at the end of the year than if we don't get a 10% correction and we keep the market going to levels that cannot be sustained.
I think it's about time we had a correction, to be very frank. We don't believe this correction is going to get out of hand on the downside.
Of course, even if there was a correction on the horizon, that doesn't mean Monday's sell-off didn't have a catalyst. In fact, the slide was likely triggered by some disappointing economic news. An Institute for Supply Management report said U.S. manufacturing slowed in January, and there's a lingering currency crisis in the emerging markets overseas. But again, those same business analysts are optimistic, reminding us that economic recoveries don't come in a straight line. Still, as Fox News' Shepard Smith puts it,
it's not a good day to look at your 401k. Maybe look in a couple of months.
For Newsy, I'm Zach Toombs.